I'm Sarah Borgeson-Keeter with REIT.com. I'm here at REITWorld 2014 in Atlanta, and I'm joined by Mary Hogan, Managing Director at APG Asset Management. Welcome, Mary.
Thanks.
Have any REIT sectors surprised you with their performance this year?
I'd actually say that it's the entire REIT sector that surprised me. We were very positive heading into 2014 about the prospects of REIT performance based on relative performance of 2013 and where valuations were then. The fundamental picture we thought was real good with supply and demand pretty much in check or favorable in most markets and in most sectors. And the interest rate environment didn't scare us at the time. We thought interest rates would move higher, but not to such a level that might derail REIT performance. But I would not have thought we'd be sitting here in November with REITs up over 20% and, importantly, outperforming the broader market to the extent that they have.
And how are you factoring monetary policy into your outlook?
I think, like most people, continue to expect to see rates grind higher. I think we expect to see the Fed do something, maybe the middle of 2015. But I think one thing I think it's important, the way we look at things, is it's not the absolute level of interest rates that really is going to drive how REITs act. I think it's really much more of a relative metric. I think it's the velocity of change in interest rates, the unpredictability of the future of interest rates, or the direction of interest rates that can really derail REIT performance. And I think once rates find their level, REITs adjust just fine.
And interest rates aside, is there any other big story you think you'll be watching this coming year?
Yeah, I think that M&A has become a real emerging theme in the second half of 2014, driving share performance, and I fully expect that to continue in 2015. There's a few factors driving that. I think that we've seen a strong private bid from sovereign wealth funds, other pension funds, and private equity firms, maybe places that are underweight the U.S. in terms of their global allocation, just really attracted to the safe haven and risk-return prospects of real estate assets in the U.S. And I think some of the private market transactions we've seen, the pricing on that really compares very favorably to where REITs are trading. But I also think just where we are in the cycle is really important. I mean, so many of the companies that are here at this conference have now been public for over 20 years. There's not clear succession plans at every company, and the stocks have rebounded so nicely from 2008 and 2009. I really have to think there's a lot of interesting conversations going on right now in C-suites and in boards just about where some of these companies are going, and I fully expect we'll see more combinations next year.
Well, thanks very much, Mary, for joining us.
Well, thanks for having me.
And for more news and analysis on all things REIT, please visit REIT.com.